All right, guys. Good afternoon. It's Friday afternoon. The market's been closed for about an hour now. It's 4:55 Friday afternoon, June 22nd. So, kind of want to go through. It's been quite a while since I've done a video, and just wanted to kind of run back through everything that we've got running right now in our stock investment portfolios. We're running a few different types of portfolios now. Well, technically there's six different, but not a whole lot of money invested in each one of them, but enough there that now we can start to kind of do some real research as to the viability of each one of the systems going forward. There was one that I'd started. Probably need to go back and look at actually again, just to see whether or not it is something that might still work long term. But we kind of went away from it for the time being. So with that said, another system I guess that we did get out of right now, just because I haven't had not in the since I'm not in the financial services industry or financial services business full time all the time. I have not been able to keep up with a lot of the mergers and acquisitions and those sorts of things, and just haven't really tracked them the way that I was hoping to. So I kind of have dropped my arbitrage system for now. Maybe something that I look into getting back into, especially based on the one trade that we ran in that system was Monsanto. So we bought Monsanto. That was in February of 2017 at $112.54. They got bought out by Bayer. It was already announced before we even purchased Monsanto. We waited until the purchase was announced, and just because it was there were a lot of regulatory hurdles for them to cross, it still made sense to go ahead and buy. And they did finally make the regulatory hurdles, but even at that, once I got into the trade, I really just kind of let it go and looked at it as, well, if they don't get bought out, that's okay. I'm just going to continue to track it, and we'll go from there. So again, we got in at $112.54. The final price on it when it was bought out was $127.95. So I bought 44 shares of it, so roughly $5,000 is what I put in. Received a fair amount of dividends, so I like to reinvest all my dividends. Obviously, I'm not going to be using the money that I'm making, especially Monsanto being in my retirement account. It's not one that I'm going to be needing the money or using the money to pay monthly bills or something like that with. So I just reinvest the dividends. So reinvested, we got an extra 0.58 shares over that time. So once we sold, we are at 44.58237 shares. And so before the dividend reinvestment was allowed, we had also captured 2 dividend payments. So we actually got cash dividends of $47.52 plus the additional shares. So total, all in, we made 15.96% on that trade, and that's after transaction fees. And so the annualized sale on that was 12.42%. So not too bad. didn't do quite as well, I guess, as the market in that time frame. I would venture to say. I actually haven't looked at the S&P from that date till the close date, but I'm assuming that that's going to be just a little bit below the S&P 500, at up 16%. It's probably real close though. All right, so now we will jump into our moving average trading system. So we'll start from worst to first. Actually, you know what? We'll start at the top. We'll just start at the top. We're going to work our way down. I don't know how long it's been since I've made a video, so you know what? We'll just kind of run through all of them that are in that we traded in this system. There's a couple in here that are a little different, but here we go. So American Eagle, we got in that at $13.37. At this point in time, we've already sold 13 of our 47 shares that we started with, so we've already sold almost a quarter of our position. You know, it's run up to 25.78, and we've got a stop loss in place on our as a trigger at 18 bucks. So right now the stock's trading at 24.38. If it would come back down to $18, we'll get out. So that stop loss moves every day. We tighten it up, move it higher and higher. So you know, right now it's currently up 86.72%. If it would drop to that stop loss, we'd be out at about a 40% gain. Can't complain about that. You know, we're talking. So we got into that on October 20th. It's been 8 months, and 86%. We'll take it every time. Obviously, it's few and far between that something like that's going to happen, but when you hit the home runs, you get a little pumped about it. So next stock, BSM, Blackstone Materials, currently up 13.38% on that one. Again, we've just been collecting the dividends pretty much. The stock really doesn't move much. So we bought in on October 4th, 2017, bought 23 shares. We currently have 24.24265, 24 and a quarter essentially. Again, that's up 13.38%. So we bought that at 17 bucks. Current price is $18.49, and our stop loss is currently set at $17.23. So, you know, that's that one. It's dropped down to CSX. So CSX, we've been in for about 4 months. We got in on February 13th at $53 and a quarter. Bought 8 shares of that at 53 and a quarter. So what you'll notice is most of the things in this system, we're trading $400 to $500 on each position. We're not, you know, we're not putting a lot of money at risk. And the thing is $400 to $500. You know, so your transaction costs of buy and sell, you know, you're looking at less than 10 bucks. At least at E-Trade, it's $4.95 a trade is what I'm paying. So, you know, I'm not paying a lot of transaction fees. So that kind of gives you an idea. And all the dividends reinvest automatic with no fees. So again, CSX. So we got 8.06 shares now. Stop loss is set at $56.12, and again, you know, right now we're up 21.35%, and it's set 15% below current price is where our stop loss is set. Cheniere Energy, so we bought that on December 29th of 2017. It's currently up 35.24%. So again, here's another one where so we bought 16 shares and I'll have to take a look at this to see this. This may not be right. Actually, this may need to be looked at again. Well, that's got to be right. I'm just curious what their dividend is right now, because this feels like there's more, maybe more of a gain written into that than there really should be. But you know what? We're just gonna have to wait and take a look. Maybe I'll just put a little note in the comments about what's going on there. So, anyways, Cheniere Energy, again, we bought 16 shares. We sold one share recently at $35.28. So currently we're at 35.24% gain. Oh yeah, nope, there it is. Ha, that is wrong. So let me put that. Okay, 15.5. So we currently have 15.5 shares. We've sold one. So it's up 27.39% since December 29th. So a little over 6 months, or a little under 6 months. NRZ, ticker symbol NRZ, that's New Residential. It's a REIT. So we're currently up 9% on that. We bought 27 shares on March 13th. We got 27.8 shares now. Stop loss set on that at $16.23. So there's still the potential to lose some money. So the first four all have stop losses set above the minimum, or above, I guess, where we would break even. The rest, the next 8, all have stop losses below break even. You know, but again, as the stock continues to do well, we'll raise those stop losses up. So New Residential, again, currently up 9%. Now we'll jump down to Western Union, up 7.58% on this one. We bought 31 shares. We've now got 31.6. Again, we bought at 1988. It's currently trading at 21.14, and we have a stop loss set at 18.72. So OXSQ, that's Oxford Square Capital, I believe, is the full name of it. So it's currently up 8.62%. Again, we bought in at 641 on this one on March 12th, and the stop loss is set at $5.91. So currently trading obviously above 640 at 683. APOG, I believe it's Apogee is the name of the company. I'm trying to pull these up here, but take a look. Okay, so APOG is down 3.04%. So we just got into this. We got in June 11th, and that's what you're going to notice. The next 5 are all very, very recent account purchases. So June 11th, we got in at $44.95. It's at $44.08, so we're down a little bit. And the stop loss is set right around $42.65. KNL, it's the ticker symbol. Next ticker symbol, Knoll Incorporated. It's down 1.31% from when we bought. We bought at 21 bucks. It's at $20.96, and the stop loss is at 1961. So next one we've got is CNS, Cohen and Steers. We got that. We bought into that on June 13th at $41.77. It's currently at $41.86. So, you know, once you account for the transaction cost, we're down a little bit on this. We're down 0.86%. So, PetMed Express, ticker symbol PETS, is up 10.03% since June 12th. That one took off shortly after the purchase, so we bought that at $41.19. It's currently trading at $45.77. It's been as high as $45.91. So It's pretty much right there at its all-time highs, or at least its 52-week highs. So nothing to complain about there. All right, so next we got CLI, and I'm gonna be honest with you, I can't even remember what it's Mac Cali Realty Corp. Just have to think about it for a second. So it's up 0.22%. We just bought that one this week as well, so we got in that on June 19th at $20.40. It's currently trading at $20.68. And I do know that that one's got a dividend coming up here real soon, so that will help, help that scenario out. So now let's go through some of our old ones. I guess what we'll do is we'll do kind of a, we'll just do those two systems, and then next time, since we're already pushing 16 minutes, I don't want to take this much more than 20 to 30 minutes. That way people stick around and watch the whole thing, hopefully. So anyways, so our next one, so that from here on you're going to have all stocks that we have closed our positions on within this system. So the first one is FTEK, that's Fuel Tech. We got in that on September 22nd at $1.09. This is one we bought like 300 shares, right? Because it's $1.09, so we bought 360 some shares. And what we did on this is we actually sold call options against it at $2.50. So if the stock would have ever went to $2.50, yep, we're out. But hey, that's almost 2.5 times our money. That's 150% gains. If it would have done that and we got stuck in, maybe it went to $4. Okay, yeah, am I gonna be disappointed? Yeah, a little bit, but still would have made 150%. So I wouldn't have been too disappointed. So we sold the call options against that position. Just sold out of that this week, actually, on June 18th. Sold out, I believe that was Monday. So we got out with a 6.38% gain on that one. So pretty solid there. Next one was Cincinnati Financial. We got in there at 73.85. Sold at 69.04. So we lost 8% on that one. And that was from February 13th to close of May 3rd. IBM, we bought in at 154.79 on December 5th. Sold at 145.34. And so we lost, so we collected a dividend actually on both of the last two, Cincinnati and IBM. So we closed the IBM position at down 6%. So that's one of the things you'll notice is within this system, the plan is to close early, close quick. When you find out that it's going against you, you get out and you lose a couple percent. You lose 6%, you lose 5%. But it's set up so that a stock like American Eagle that's up 80-some%, right? It's pretty much taken care of all of the losses over the last, over the positions that I've closed. There's one other one that we'll get to here in just a minute that we closed at a gain. So right now, if you look at this system, 2 out of 17. So you close 2 out of 17 positions at a gain. 15 of the 17 have closed at a loss. I think, man, that's terrible. And you know what? In all actuality, yeah, I'm not real excited about that anyway either. But I will tell you. Let me take a look what the system has done as a whole, so that you can kind of get a feel for what it's done against the S&P 500. So far this year, that system is up 5.28% versus the S&P 500 up 3%, and the Dow down 0.5%. It's trailing the NASDAQ. Obviously, the NASDAQ's up 11% this year. I mean, the NASDAQ's just been flying and flying and flying. So, let me take a look and see if I can get it all the way back to when I started. Maybe. Where the heck is this? Oh, there we go. Alright, so okay. So I started the system in September of last year, and we're up 7.64% since then. So we are still trailing the S&P and the Dow. The S&P's up 11.46% in that time. The S&P's up the Dow's up 10.07%. And I'll tell you what the big key is on that. And the big key was the very, very first month that has 4 trades in it. 2 of them were just terrible. 2 of them just completely went against me. One of them performed decently, but yeah, the 2 were just awful. So actually, if you would go through and weight it based on the amount of premium or the amount of money that we had invested in it, it's probably still back ahead of the S&P 500, but that's okay. I'm not worried about it. I know that I know that where it's performing at, since I got it up to scale and have a decent amount of money held in there, that it's doing pretty well. So, you know, for example, November it made 6.7%. In December, 3.4%. It only made 0.7% in January when the Dow and the S&P both made 5.5 to 6. Just didn't perform well in January. February, it lost 3.4 versus the S&P losing 3.9. March, it lost 2.5 versus the S&P losing 2.7. April, it made 2.8 versus the S&P's 0.25. May, it made 5.1 versus the S&P's 2.2, and so far this month it's up 2.7 versus the S&P at 1.8. So, you know, again, I'm not really worried about what happened early on. I know that it has a negative is not the right word, but it's just, you know, there really wasn't much scale involved in it yet, so I'm not worried about that as far as whether or not it's indicative of what the system can do. So, all right, guys, we're going to stop there. Again, we're well over 20 minutes. So we got through those 2 systems. Next time back, we'll jump into our technical system. We'll jump into, let's see, what's the next one? That might be the only 2 that we get next time. We'll jump into the technical. We'll jump into our value system. So our value system that just knocked the leather off the ball in 2017 has just been awful in 2018, and that's why I have different systems, because I know when one performs well, another one may not. and vice versa. So you just have it set up so that when something's doing good, you hope that it offsets or does a little better than the one that's doing bad. That way, you're still making money even when one system is not performing well. So, all right, guys, that's it. Take care, and we will see you next time. You'll get this here on Chris on C Malik on my Instagram TV, and I will also upload it to Camp Financial, the Facebook page. If you want to follow the Facebook page, there's more activity as far as so I'll just drop notes in there usually when I'm buying something or when I see something that makes sense to buy, as well as so the Facebook page is probably going to be a good place to get more than just these videos. So alright guys, that's it. Take care, and we will see you next time.